Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So situation here on euro stance today is really tricky. Why it's tricky? Because if you remember, last week we have paid a lot of attention to the bullish grabber that has been formed on this retracement, and we said that the lows of this grabber is extremely important, because the breakout of the lows and raising of the grabber, it will mean that market could move to the next support area, that is 1450 approximately. Yesterday, as you can see, this attempt was made to pass through these lows, but by the close, price action has returned back up, and that was not really a breakout, so market was not able to close below it. From the theoretical point of view, as we have the new lows, we can't really rely on the grabber. So, but in general, the price action that we see here is still bullish, and market really has good chance to proceed higher. This is the first moment on a daily chart. I would suggest that that was the wash and rinse of these lows. That's potentially is in fact the bullish pattern. And as we will see a bit later on the daily, on the intraday charts, on the hourly chart, the price action that was formed here, as euro has shown, is what really was the wash and rinse. Besides that, I also would like to show you the picture of the dollar index. And on the dollar index, you'll see that the grabber that has been formed here, this corresponds to the euro currency, is still valid. And this top on the dollar index was lower than the grabber's top, which makes me think that overall setup that we have discussed and it's still in place, and downward action here on the dollar index will continue right from here. It's the same on the euro currency. The upward action probably will continue right from here, and we will not see another leg down to the 114.55, because on the weekend we have discussed the possible Gartley's triple to buy pattern, if you remember. So that's a very important conclusion that we could make from the price behavior that we see right now on the euro currency. Besides, if you will take a look at our setup on the cable that we also have discussed before the non-farm payrolls release, take a look. So everything still stands very good. So currently, markets across the board reverse the impact on the non-farm payrolls release by the reasons that we have announced in the weekly report. So we said that the positive data, non-farm payrolls release, have really big importance for long-term perspective, especially for the December meeting. But in a shorter-term reaction will be muted, because the fact that Fed will raise rate in September is really no doubts. It's already almost 100% expectation that will be done. That's why in a short-term perspective nothing has changed, and it explains this really short-term reaction in the market, because markets right now stands in upward retracement, and this retracement probably will be over before the December meeting, and where it will start to come in close to the December meeting. That will bring impact, starts making impact on the markets, and that will be the moment where traders will recall all the non-farm payrolls release that was really positive, and how its mass of these positive reports are building and growing right to the decisive moment. But currently, as I said, in the short term, it's already priced in, and that's why it's muted reaction on this. So take a look at the cables. Was just shadow up, drop, and on next session it already has been reversed and compensated by the price action. The same we see on the euro currency right now. So I would suggest that we still have our bullish preparation for upward continuation here. The one moment still exists, guys, and we'll take a look at the follow time frame chart. Recall that we initially were watching for that A, B, C bottom pattern, but right now we can't do this because these lows stands under this one, and that's why currently we could watch only for this patient A, B, C pattern. So on the 4-hour time frame chart, guys, we have the same ABCD patient that we have discussed, and that was our target if market will drop below it. It's 114.65, sorry, not 50, 65. It's also OP target of this ABCD patient. But here, guys, take a look. This was the failure breakout of the triangle. Market stands very well above the monthly pivot point, and was a reversal candle has been formed here right on the bottom. That's clear signs of the Russian rinse. Here we see the acceleration signs on this thrusting upward direction, which really looks very good. And finally, on the 4-hour time frame chart, we have the bullish divergence with these lows right at the major 50% support on the daily 4-hour time frame chart. So at 1516 area, it's 50% support. We know that euro currency respects the 50% levels very well. So on the hourly chart, that could be a kind of the action that reminds me of the double bottom, actually. So if you'll take a look at the channel that has been broken, that we also have kept an eye on previously, take a look. That drop lower was the just retesting of the same trend line by the lows. And the A point is clear signs of the Russian rinse. Take a look. Minor breakout of the lows and really very fast upward action. Clearly stops have been grabbed and market reversed. So that's confirms our idea. It's a really bullish sign. Now we have the A, B, C bottom pattern in progress, and take a look what's going on right now. Market trying to enter in this consolidation. Usually consolidations works as the separate area between the free space. So here is the downward free space, here will be upward free space. This market breaking through this consolidation, open roll to the free space and dropping to the next support or target. The same is going on right here. So you can see market already tested first retracement, now is challenging for a second time. When it will enter the consolidation, it will open roll to the upper border, and this breakout could follow. Because what's important here, guys, is we have A, B, C bottom. OP, as I said, is above the recent top. So OP stands above this previous tops, and it's really big chances that it will be broken up. And the market protects, trying to prevent price re-entering in the consolidations. So that's why we see here some struggle. But once market entering the consolidation, it opened a really big space in the direction of the movement. So today it will be a very important moment. So taking in a broader picture with this double bottom, if we'll call it the double bottom, because it's really a lot of nuances that is typical for the double bottom pattern. Of course, we could treat it as a double bottom only in the short-term perspective, because double bottom usually forms in the important reversal points. But here we have mostly the final point of the retracement. But for our hourly chart, that really could be the double bottom. We do not speak about the possible godless triple to sell here, because the context overall is bullish. When godless triple to sell is a potentially bearish continuation pattern. That's why it's not matched to the current situation. So speaking on the target of the double bottom itself, usually it equals to the width of the pattern. So we will, for example, measure the width of this pattern and or height, let's call it a height. So counting to the upside from the neckline, we'll see that will be approximately 118. So that will be the potential target to the upside. So that's approximately the scenario that we'll be watching for. So currently, guys, it's not the time yet to speak about further drop to the 1465. Currently, we should postpone this idea or even deny it for a while. And overall context looks bullish by the nuances that we have just discussed. Russian rinse, divergence with the dollar index, divergence here, trusting action, and in general this triangle is the bullish continuation pattern, well standing above the monthly pivot. So it mostly point on the upward continuation in euro currency.